Well, it may be the start of the week, but it is the end of the month and the end of the third quarter, a period that was defined by trade tensions, recession concerns, interest rate worries, and now political drama. But despite it all, stocks stayed steady. So let's run through the numbers. Today, on the last day of the quarter, the Dow Jones Industrial Average rose 96 points to 26,916. The Nasdaq added 59, and the S&P 500 was up 14. For the month, all of the major averages were higher. And for the quarter, the Dow and the S&P were up, but the Nasdaq dipped slightly. And now comes October, a month that historically is volatile. And the next big hurdle, earnings. Bob Pisani is at the New York Stock Exchange.
With the third quarter officially out of the way, the markets are still on track to end the year strong, but investors are going to be fixated on the next big catalyst, and that, of course, is earnings. So this great earnings recession fear that dominated the first quarter and the fear that companies would dramatically lower earnings expectations in the second half of the year because of the tariffs and the trade wars and a global slowdown, none of this has ever come to pass. Earnings have held steady and remained roughly flattish for the first quarter, the second quarter, and now for the third quarter. Going into the year end, the fourth quarter estimates show a gain of roughly 4%. But still, that's a big improvement over the last three quarters, and that's good news. So here's the problem. The two biggest issues that would move the needle on earnings in one direction or the other are unresolved. The first one is the trajectory of trade talks. Are we going to get more or less tariffs in the fourth quarter? And then there's the Federal Reserve. Are they on hold when it comes to rates, or are they not on hold? And while there's been no wholesale attempts to lower earnings in some big way, we do see a couple of troubling trends emerging. 13 of those 14 companies who've reported for the third quarter have had their estimates for the fourth quarter come down. That's a very high percentage, north of 90%. And there's been very notable downward revisions from some important bellwethers like FedEx and Micron and Carnival. The other trend is energy is seeing very big downward revisions, even in the third quarter. Exploration production companies like EOG, for example, estimates have come down 20% for this as a group since July because excessive production of oil is keeping oil prices low. That's something to keep an eye on as well. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.